Welcome to Indianomics. Among the announcements in the G20 that got Indian stock markets excited is the IMEEC, or the India, Middle East, Europe Economic Corridor. The plan under this initiative is to connect India and Europe through the Middle East. It envisages a network of rail lines in the Middle East which connect India and Europe on either sides by sea. The intent is, one, to encourage more trade, two, to provide green infrastructure, and three, to be a counter to the Chinese Belt and Road Initiative, which had led to rising Chinese influence. Now, the announcement of the economic corridor became a tailwind for Adani Ports, actually, the stock markets on Monday, since that company has already acquired the Israeli port of Haifa. But how much should we expect from this initiative, and how quickly? I have with me an elite panel who would know a thing or two. Ambassador Navdeep Suri, former ambassador to Egypt and UAE, among many other positions. Mr. Rahul Chhabra, former secretary, economic secretary at the MEA, and he has been ambassador to Somalia and other countries in trade relationships. And we also have Somnath Mukherjee, who is the managing partner at ASK Wealth, who wrote a very interesting article in the Times of India. Gentlemen, thank you very much for joining me. Mr. Chhabra, let me start with you, since you have been in the MEA as the economic secretary. If you can tell us, what is your first impression? Is it likely to take off very soon? Is this the start of something big?
Good morning, Lata. Thank you for having me on your show. Yes, it is a big deal, in the words of President Biden itself. I think it's a good way to start off. The important aspect to note and remember is sort of the geopolitical context, firstly. Look at the countries. Let's start with the ones in the middle. Saudi Arabia, UAE. And then Jordan and Israel are also part of the deal, though they didn't sign on. In Europe, the three biggest economies, France, Germany, Italy. Italy, by the way, is already having second thoughts on the BRI, which is the only European country that has signed on to it, of the G7. And on this end, India, and of course, all prodded by the US. So there is a huge geopolitical context in which this is being located. Of course, things have quietened down in the Middle East, and US was seen to be ceding space, whereas they are wanting to come back and become a big player in that part of the world. And what better way than to connect one of the fastest growing major economy, a democracy, India, to Europe. And in the slightly longer term, they're even looking at having goods move from Southeast Asia, another huge growth area, through India and into Europe. So it's a big deal which is happening, started being launched just now. It's been 2 years in the making, and it is now, we have just seen the sort of initial announcement.
No, that's an important point that you said it is 2 years in the making. And Ambassador Suri, let me come to you on that. The earlier avatar is the PGII, or the Partnership for Global Infrastructure Investment. That was the G7 version. And even under that version, they'd already given some money to Indonesia during the G20 meeting in Bali. And they've also funded a $15 million health initiative in India. So would you say that it is good to go? There is already a core.
It's good to go, but from a different perspective, Lata. And that is that, what you're looking at is a multimodal connectivity, that you will have a ship sail from Mundra or Mumbai. It'll go to Jebel Ali or Fujairah, unload its cargo onto railroads, trains that are freight trains that are ready to accept that cargo. And there's already a link, Etihad Rail, from Fujairah to the Saudi border. There's already a substantial part of a high-speed freight rail link in place from the UAE-Saudi border all the way to the Saudi-Jordan border. You have a missing link of about 300 kilometers within Jordan, which will be from the Saudi-Jordan border to the Jordan-Israel border. And then from the Jordan-Israel border to Haifa in Israel, there's already a rail link in place. So I would say that about 75% of the physical infrastructure for this is already in place. The remaining has to be built. But there are issues related to standardization of that infrastructure. Are we talking about the same gauge? Are we talking about containers of the same size, which can be carried seamlessly? There'll be work to be done on customs infrastructure, on regulatory frameworks that all countries sign off to. And once that is done, I think you might see it coming up sooner rather than later. I'll just make two additional points, if I may. One is that I think we need to think about it in terms of the entire conversation about building supply chain resilience. Mm-hmm. Currently, all our trade with EU, and EU is our second largest trading partner as a group, is via the Suez Canal. Mm. We saw what happened when you had that ship getting stuck in the canal. And it disrupted supply chains, and it sent panic waves through the international business community. This creates a handy little alternative to the Suez Canal so that you're not entirely dependent. Second, I think it's what the numbers that the calculations have been done. If on an average it takes a ship 18 days of sailing from, say, Mundra to Piraeus in Greece, or to Italy, or to Marseille in France, this could potentially reduce the transit time to about 10 days. So it's a 40% saving in transit time. And the third is that imagine this not just as a transport corridor, but as a connectivity corridor, because they are also talking about fiber optic cables that will carry data. And they're talking about pipelines. In fact, there's a separate MOU between Saudi Arabia and the US about building a green hydrogen pipeline, which will export green hydrogen from Saudi Arabia into Europe. I was at this India-Saudi Arabia Investment Forum yesterday, and it was interesting to see Saudis present themselves as potentially the superpower for green hydrogen, given their 365 days of sunshine, abundant desert lands, and all of that.
Okay. So, Will, since you two gentlemen have been in ambassadorial positions in both these places, I just want to get from you, Mr. Chhabra, how quickly do you think that this last 300-kilometer rail link can come and trade can really pick up in this route?
It'll take a bit of time. I don't think we should sort of jump the gun so quickly. I mean, they've given a timeline. I'm glad they've already set a timeline of 2 months for the senior officials to meet and sort of structure, because there's a lot of loose ends to be done, not just the physical infrastructure that needs to be built, as Ambassador Suri sort of hinted at. There's the regulatory framework, the customs input, regulations to be in place, sort of inspection. So lots of those sort of formalities also to be completed. And the funding. And of course, the Saudis have already put in $20 billion on the table. There will be more of maybe multilateral funding, private funding. Because once the political intent is there, the most important part is getting all these people on board to be agreed on a concept. So once the big players, the EU, the US, India, the Middle East, everybody is on board as a concept, now the funding will start flowing. And then they'll have to structure it. So it will take some time still before the first goods really start flowing through this.
The funding. And I'm going to come to the tricky question to both of you in just a minute. But let me get Somnath in. He's written a very interesting piece in the Times of India, comparing it, or rather putting in context how Lord Curzon tried to build the Middle East and ring fence it for the British Empire to have a quick trade route to India. But Somnath, would you as a wealth manager, would you start putting any money at all in, say, Adani Ports or L&T, the likely beneficiaries? I mean, L&T already is building a lot in Saudi Arabia. All those green hydrogen projects Mr. Chhabra and Ambassador Suri are referring to, they're already in there. Is it a time already to think of it as something that will come up?
Yeah, thanks, Lata, for inviting me. First of all, I wouldn't be commenting on specific companies or stocks, but in general, is this an investable idea right now? Probably we are a bit too early for that. We have to see how this whole thing pans out, how the whole project gets delivered, conceptualized, and then finally executed. The biggest thing is that the biggest thing going for this project is essentially twofold. One is conceptually the point of China plus one, the same principles that drive producers from significant excess capacity in China, which has driven down costs for every consumer globally, to be reshoring it to various places, whether it's Vietnam, Korea, United States, and also India, at significantly higher costs for them, is what will drive this as well. There is a rediscovery of redundancy as opposed to optimization in trade, in business, in commerce. And we've seen time and time again, Mr. Suri mentioned about the Ever Given ship that blocked out trade on the Suez a couple of years back. We've seen the global financial crisis in 2008. That was a unique outlier example of how too much optimization nearly brought down the Western financial system as we know it. So there is a rediscovery of redundancy and the merits of redundancy in commercial and trade flows. And second thing that goes in favor of this project, besides the fact that some parts of it are likely already in place, like the Etihad Rail, is also the constituent members of the project envisaged. Between the United States, India, and Europe, we have probably the best financial expertise and bandwidth available in the world. So unlike the other BRI, which is the Chinese Belt and Road Initiative, that fundamentally laid a lot of emphasis on the political side and got victim and became a victim of lopsided financial structuring. That risk is substantially lower in this BRI, which is the Boats and Rails Initiative, if I may use that expression for India, because financial structuring should be high quality, high class, given the constituent members involved. Therefore, while at an investor perspective, it's too early to take a call because we have to see how it pans out. But from a larger long-term perspective, does this have a very high chance of success? Absolutely. And there will be opportunities for investors to participate in the months and years to come.
So not yet an investable idea, but a very good lead for future investments. But you all touched on the funding. Janet Yellen made it clear she will not even increase the capital of the World Bank or their share in the World Bank. Who is going to put money on the table? That question after the break. Viewers of Bazaar, you will get to watch it after Waqt Dance.